Shut up and sit down.
What is going on, everybody? Welcome back to Rebel Trading Group Podcast, episode 57. 100% gluten-free episode brought to you today by yours truly, the gluten-free Jason Bessing. I was going to do this podcast a little bit later, but we are approaching 4 o'clock at the closing bell today, Thursday, December 27th, 2018. We're rapidly approaching the bell. We've had a volatile day, and I just wanted to be recording when I was saying whatever I'm going to say. Like I said, very volatile session. Yesterday, everybody knows we had almost 1,100 point gain on the Dow after dipping down in the morning. Ended up positive. And then today, we sold off about 200 points from yesterday's humongous rally, and we are about to end positive. The Dow is currently at 22,939. S&P is at 2,470. NASDAQ is still down at 6,526. Oil continues to slide, continues to dip down to $45.47 a barrel. Gold sitting at $12.76 an ounce, up $3 on the day, which is a solid move. Bitcoin and the cryptocurrency markets taking it on the chin. Giggity. Bitcoin down 5%. Altcoins down about double that for the most part. Volatile session. I'm going to pull up DIA here today. DIA is one of our favorite ETFs here at the Rebel Trading Group. We're not big fans of ETFs, but if we're trading options for the week, we like to look at ETFs for sure. The Dow Jones ETF is DIA. At one point, she was down about 2.66% and is now currently up 0.4%. That's... I don't know. I want it's a 700 point swing in an hour and a half, 2 hours, hour and a half, 700 point swing. I'm bringing you this episode today, A, because we need to bring out some more episodes in general. B, I love doing this, but C, I just want to talk about what the fuck is going on out there. Oh my God. But first, I always have a term for you. And today's term, and your market terminology section, is going to be a stock split. What is a stock split? Well, a company decides to split its shares in order to make the price more attractive to more buyers. So, I'm going to use a big name here. This is not the case, but we're going to just use easy numbers, okay? Let's say you own 100 shares of Coca-Cola at, let's say $50, right about where it is today. You own 100 shares at $50. Well, Coca-Cola decides to split its shares. So what it will do is it will bring your share cost down to $25, but you will now have 200 shares at $25. Why do companies do this or something like this? Well, like I said earlier, it increases the attractiveness of the price to other buyers. So currently we see things like Amazon and Google trading in the well over $1,000 a share. Well, the people at the bottom, the day traders and the people with small money, can't really get their hands into Amazon shares directly very easily. Yeah, there's ways to go around it, but point being, we can't go load up on 100 shares of Amazon. We just don't have that kind of money. So, what a company will do is split its shares. It may be 2-for-1, 5-to-1. Berkshire Hathaway once did a split for 50-to-1. I think when the share price reached, I think it was $5,000. It did a 50-to-1 split. So every share you had now became 50 shares. So it doesn't increase wealth at all. It doesn't do anything for you, but it gives you more shares. It looks like it's more attractive. They basically just double or triple the amount of shares out there. Makes them easier to purchase. One advantage to this is it also increases liquidity. If you look at Berkshire Hathaway A shares trading above $250,000 a share, last time I looked, the average volume on that is 37 shares or something like that. So there's a huge bid and ask spread that might be tens of thousands of dollars in difference. So the larger the share price, the larger the spread. So it increases liquidity. So now it might be easier to sell 50 shares and exit a position. It is expensive for a company to do it. That's probably why we don't see it a lot today. Stock splits used to happen all the time, and they're a sign of good, healthy companies. If a company keeps splitting its stock, that's a good, healthy sign. I think Apple shares have split 7 times. Ford shares have split about 5 times. Coca-Cola about 5 or 7 times. They just keep splitting and splitting and splitting. And you can actually go into a stock split calculator. There's a website. I think it's Stock Split Calculator. Just Google that, and you can put in if you had 1,000 shares and you put in like the date, it'll say, oh, if you had 1,000 shares of Apple in 1987, you would have 386,000 shares of Apple today, or something like that, due to the splitting and splitting and splitting and splitting. So it's a sign of a healthy company. It's a sign of a healthy stock. But a lot of companies tend to not do it because it is expensive. And they can increase wealth in other ways just by increasing the dividend or doing share buybacks to increase wealth. A lot of people are against it, like Warren Buffett. He says it kind of attracts scum, which is true. It attracts more short sellers because there's more money that you can kind of just throw at a cheaper stock now. It gets rid of short sellers. It gets rid of day traders. I can tell you people ain't day trading Berkshire A shares, or people are trading Amazon and Google, but they're not trading 10, 50,000 share lots and affecting the stock price that much. So that's a stock split. Like I said, they don't really happen that much anymore. Why? I don't know. But they do. They are out there. Funds will also do splits, stock splits, especially leveraged ETFs. I think the SPXU just split a few months ago. I think it was like a 5-to-1 split in order to make the share price cheaper, because that is a trading vehicle. A trading vehicle is a triple leverage fund is a trading vehicle. Therefore, more shares increase at lower prices increases the liquidity of that trading vehicle. If UDOW was just at 65,000 a share, that kind of defeats the purpose of UDOW. So that is stock split. If you have any questions, comments, concerns, suggestions, ideas, insults, whatever, email us, rebeltradinggroup@gmail.com. So, like I said, I just wanted to talk about what the fuck is going on out there in this wild ride of a market. It's crazy. I talked about last time, or a few episodes ago, some moves that you can make to kind of tread the waters if you decide that you want to stay in this market. And so go back if you didn't listen to that. We're going to touch on it a little bit today. Number one, and let me preface this. This could be a multitude of factors, and I don't know exactly what it is. In order to understand exactly what is going on in this volatile market, you have to go inside the head of every single stock trader out there. Every hedge fund manager, you have to get the general consensus of every single person. That's why it's so difficult. But I can point out many of the factors that point to what is happening and why this wild ride may continue. So, I'm going to preface it by saying I don't know exactly what it is, but I'm going to point out some of the things that we know are causing some of it. Number one, for sure, is interest rates. The Fed is continuing to raise rates, ignoring what Donald Trump wants, blah, 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 which they should. I don't think they should be raising rates, but they should be ignoring Donald Trump, whatever. They're going to continue to raise rates, which saying, even though they said that they are pretty dovish on the economy and we're at near neutral rates, they want to continue to raise rates. So, whatever. They're going to do a couple more hikes next year after this previous one they just did. So that will cause more fear in the marketplace. Why? Because it's going to make debt more expensive in the short term. So when debt is more expensive in the short term, companies don't borrow money. When companies don't borrow money, they tend not to grow and expand. When companies aren't growing and expanding, some of them are bound to start hemorrhaging money, maybe go bankrupt. It starts a chain reaction. So the tightening of the money flow out there is causing the sell-off. 2, profit taking. We've had such a huge bull run over the past decade, since 2008 happened. Ever since then, it just went up as rates were at zero. So profit taking is happening, especially now that the fun is over. That's for sure. The ride is over for a little while. We're now in a period of distribution and consolidation, for sure. So people are taking profits of things that they've held for past 3-4 years. And even though they're down 5% on the past month on it, they're still up 22% from when they bought it 3-4 years ago. Profit taking is happening in the mutual funds. Number 3, end of year. With that profit taking, we're also seeing loss taking. We're seeing sell-offs to take either long-term or short-term capital gains tax in order for tax purposes. Notice I keep saying tax because tax season is coming up, and it affects these big institutions and large money traders, I guess is the better way to put it. The big whales out there, they're readjusting the portfolios. Readjustments and realignments. Like I said, consolidation and distributions are happening. People are trading off the shares. Here, I don't want this. I'll take some of this. No, get this out of here. Nope, I'll take some of those. Everyone's trading. I don't want this. You take this. You get this away from me. It's all just chaotic, though. So far we have the tightening of the rates. We have the tax fears. We have the profit taking. And last but not least, I feel like we have just the chain reaction going. Just one thing just keeps continuing to happen. And it's just, Fed's raising rates, and now they're looking out, and let's just sell off, sell off, sell off, sell off, sell off, sell off. There's just a few things that are happening. I think yesterday's huge 1,000-point rally was due to a short squeeze, and people were in order to buy out of their short positions, they had to buy up at a higher price, which kept bidding up the price of the market. If you looked at yesterday, we were at average volume. Wasn't a huge spike in volume on that trading session. Not an unnormal amount. So there's just a lot of uncertainty out there. That's what's going on. It's just uncertainty and fear. But us here at the Rebel Trading Group, we're going to ignore that, and we see this as buying opportunities. I continue to say this is the perfect time to start loading up on some of your favorite blue chips. I guarantee you, I will make a bet right this second that in 2 months, within 60 days, Warren Buffett is going to come out saying that he's been buying something. I don't know what it is. I'm not going to call that, but I know he's buying in this market for sure. For sure. So I just wanted to get some content out there with you today, kind of just brush over some of the crazy shit that's been going on. It's been a horrible ride. It's just, ugh. But buy your favorite companies, the ones you believe. Make sure they have strong financials. They're your core holdings. Don't overload in this market. Don't go directional. Don't call which way this is going. We continue to be in a downtrend. Sure, yeah, that's what it says, but anytime this can turn around, and those shorts will turn around and bite you in the ass. So, if you have any questions, comments, concerns, suggestions, insults, ideas, whatever, email us, Rebel Trading Group with 2 G's. That's rebeltradinggroup@gmail.com. We are on iTunes, Rebel Trading Podcast. We are on YouTube. That's where we have an archive of all of our videos. All of our previous episodes are on YouTube. Our newest episodes are on iTunes and Soundcloud. You can Facebook us. We're not very active on it, though, I'm going to be honest. But best way would be to email us. Remember, we're having a logo design contest. If you send in a logo idea and we like it, we will buy it from you. And you'll also have a credit in the show notes of every episode that we do. And if you want to be on the show, talk about trading, anything financial. If you're just smart with money, maybe you're good at buying a house or good at car shopping or something. I don't know. Bring it on. If you want to be on the show, hit us up. Thanks for listening, guys. It's a short episode. I'm not even going to tell you what I'm watching. I'm just going to keep buying forward, baby. Love you guys. Thanks for listening.
Shut up and sit down.